All right, let's get started. Welcome to the live session. We're going to be covering crypto markets and some other altcoins I'm looking at, and then other changes that are happening within crypto to get us more excited about what is coming ahead for the year of 2022. Let's start off with BTC real quick, the one that controls the market, right? The one that rules them all. Bitcoin, once again, has broken outside this trend line that we've been watching. And if y'all remember, yesterday we had picked up a Solana position around 150 and some change. Let me see here, right? We had picked up a Solana position somewhere around here, or actually somewhere around here. And then price moved up and then started to roll over. And we kind of just cut the trade right around this area as soon as it started to roll over. Because what I saw happening was at the same time, BTC was doing this, failing to push up and starting to roll over. And so based on that BTC weakness, we kind of cut that Solana trade. And I'm glad we did, because remember, our stop was at this X at 143.5, and we would have gotten stopped out overnight, right? So I think we lost maybe like 1.5 or 1.25% versus, the 4.6% that we would have lost had we held on to that position. Okay. Part of the confusion of this market is recognizing what exactly is relatively correlated with BTC and what is not. And then how long does that correlation last? And also, is the overall strength of particular altcoins able to overcome that weakness in Bitcoin? You guys know very well, some of our other focus has been in things like Atom, right? I told y'all, Atom still looks overwhelmingly strong compared to what BTC looks like, which is basically like shit the last 2 months or so. Atom has been performing relatively well. FTM has been performing relatively well. When Bitcoin drops, like say today, okay, Bitcoin is down today at 1.07%, while FTM is actually down 4.8%. Atom is actually down 5.2%. So they can still have that sort of higher beta, downside, meaning when Bitcoin drops 1%, some of these altcoins drop 2, 3, 4%, right? When Bitcoin goes up, sometimes these altcoins, few of them go up 3, 4, 8%. So the problem with the market as of late has been the narrowness and the very isolated and fast-paced movements that we've been seeing. So what this tells me is that the market overall is still trying to figure out the kinks within how to solve the underlying issues. And the underlying issues are these. If y'all remember, on Coinalyze, we spoke about some of the bigger data points. If you look at the global charts of total open interest, we're still very high at elevated levels of $34.05 billion. That's a lot of futures contracts. That's a lot of derivative contracts that are not spot. It's just leverage. That's it. And that leverage generally tends to get flushed out by this point in the cycle. If you look at the overall volumes of exchanges, they peaked in April and May back here. And since then, they've been continuously just kind of flat or going down. If you were to look at this as like a candlestick chart, they would basically be putting in lower highs. So these two metrics together have told us that the overall market is not necessarily ready for a big move up. We're not ready for a quote unquote bull market just yet. And that may need to be cleared up by two things happening. Number one, open interest gets flushed to the downside. That means that volume itself will pick up. Because remember, when open interest is getting flushed, that means a lot of orders are being triggered, right? Whether they're liquidations, whether there's forced sellers, doesn't matter, or whether it's people panicking. That generates volumes. And when it generates volumes and you see a lot of futures contracts or derivatives get flushed, That means that there's better buying opportunities and bigger players can step up and get large orders filled to the tune of 50, 100 million, 200 million, $500 million. That has not happened yet, right? So I'm expecting at some point for that to happen. Now, the other way I'm looking at the market is, what if it doesn't happen in a big cascade? What if it just continuously just grinds the market down further and further and further? And this has been the case for BTC. If you look at Bitcoin from the high here in November, okay, basically in similar fashion, the high here in November for the total market cap, we have been continuously going down from $3 trillion to $2 trillion right now, right? That's a loss of 30%, 33% or so. So a 33% drop in overall market cap has indicated a few things. Number one, of course, BTC has definitely gone down by the same tune. However, certain altcoins like Atom, like I said before, FTM, NEAR, One Token have actually been going up. That means they've been actually appreciating in market cap. They've been appreciating dollar value. But other assets, let's just say Cake, have been continuously going down basically since April. They've lost 75% of their market cap. 1inch has lost from the highs up here almost 70% of the market cap. DYDX from the highs up here has lost 73% of the market cap. Step Finance, whether you want to look at this high, let's just say, maybe this was an emission dump, but from this local high in September, we're still down 84% from the market cap, right? So the fact of the matter is that most of the market, you could click on really anything. Look at Polkadot here, right? Polkadot is still from this high over here, it's still down 51%. Mover from, let's just say some of these wicks over here is down 66%. So 90% of the altcoins that you pick are going to have this kind of ugly structure. So what do you do in a market that is extremely narrow and very fast in its movement? It's narrow because, remember, One Token, FTM, Atom, and NEAR are really the strongest of the packs. Then, of course, you obviously have, if you go on CoinGecko, you will find other altcoins that are going up. Remember, we did a video on Cosmic Universe, right? These are smaller, obscure tokens. They're part of a game. It's the in-game play to earn economy token. These have been going up consistently for the last, I don't know, maybe several days, several weeks, right? They're up 15% on the day today. Let me see what Cosmic is up, okay? Cosmic is up 16% on the day today. But does this really matter in terms of the overall structure of the market when total market cap is showing you it's going down and BTC is showing you it's going down? Not really. But it's good that we know that these tokens, part of this larger game that we're following, Cosmic Universe. By the way, you can watch this on our YouTube channel if you missed it in our community, okay? But fact of the matter is, isolated parts of the market are going up, and we have to pay attention to those because sometimes you have to do more research for where the hidden alpha is. You may not be able to just long Bitcoin and just pray that it goes up. You may not be able to just buy some random shitcoin and then hoping that it goes up, right? In today's movement, this is how a majority of the market looks. And then you just have some random crap like THETA, which is up, 30% over the last 4 or 5 days, right? So you could see the movements are getting narrower. And what this reminds me of is a phenomenon of musical chairs. You guys know very well, you've played musical chairs as a kid, right? Whether you've played it at family events, birthday parties, how does musical chairs work? Everybody's running around in a circle and hoping that the few people are able to sit down at a chair. And the chairs get fewer and fewer, and more people get weeded out of the market. This is how I see the market right now, is it's a larger game of musical chairs, and there's 10,000 retail folks, and then there's a bunch of whales. And the whales actually know, for the most part, when the music is going to stop. So retail, for the most part, is really at a larger disadvantage. And this tells me that when the movements are narrower like this and the game of musical chairs is putting us at a significant disadvantage, we need to be far more cautious and very, very careful in this market. How are you going to be cautious and careful in this market? Well, number one, you can't fall for scam pumps here and there. You can't start looking for the next 50x or 100x coin, right? And just start moving your money back and forth. You can't start sizing up in heavy levered trades. Because remember, when the market overall is going down and volatility is low, what happens is the market makers will undoubtedly start seeing orders being put as high levered trades, and you will be having a target on your back. Okay, as soon as you enter, I guarantee you that the market will probably start sliding the other way. Why? Because the volatility is thin, the volumes are thin. It's easier for the market makers to play in this environment and start squeezing every single dollar, every single penny out of every single trader. And this is the problem and the crux that we're in right now, is that the movement right now is almost signifying to me that the market will continue to grind down, or we might get another flush. But I'm not quite seeing if we're just going to rip up from here, because every time Bitcoin looks like it's creating a base, it just continues to just keep grinding down. For example, in this big range that we were creating, you can see we took out this high up here, then distributed, came down to this trend line thinking we would keep heading up. But then what happened? We just started grinding down outside of that trend line. See, this is the kind of weakness that I'm talking about, that the market is literally showing you that, hey, we are still weak. We're still being governed by larger forces outside of our market. And what are those forces? It's the stock market. It's what's happening on the dollar. Okay, if we go to the dollar, the DXY index, right? All the things that are happening, the DXY, what's happening in the stock market are largely governing what's happening within crypto, right? Those forces, that big money is actually moving our markets in significant ways, or keeping our market in check in significant ways that we cannot understand right now. So I urge you guys to be careful. Now, I have two trades that I'm very, very closely watching. Two set of trades rather. Number one, I think we still need to keep an eye on the local movements of Phantom, Atom, One, Harmony, and then Near, right? These are really the exceptional structures in the market. Let me go over here real quick. These are really the only exceptional structures in the market that I would consider trading to the long side. Everything else, I guarantee you, looks like shit. Okay, I know THETA is up today, but for the most part, like, it's still a pretty terrible looking structure, So I don't know, maybe it just bangs right into this $1.50 resistance and then it starts rolling over. Okay, that is entirely possible. Now, the other trades is on the short side. Now, I have two trades, and I think I've marked these out before for y'all. Okay, remember, Maker, right? I talked about this in our Advantage community a little while back. I told y'all that pay attention to Maker. This is a very, very large descending triangle. These descending triangles, if you're not familiar with them, guess where else you've seen them? You've seen them back here in 2018, before Bitcoin created this massive, 8 to 9 month descending triangle and then finally rolled over. And from the point of it starting to roll over, it basically dropped 50%. These descending triangles, when they are large like this, more often than not, they're pretty damn bearish. So this is one trade that I'm paying attention to on the short side. Okay. The other trade that I'm really paying attention to is Luna. Now, I read some research about Luna, and I don't really want to take a stab at it failing or anything, or it potentially creating a cascading liquidation or anything. But if you look on my Twitter feed, right, there's this thread that I was able to read, and it was interesting. I don't quite know if it's completely accurate. Let me see where it is. Shoot. I'll find it and I'll post it for y'all later. But it was on my Twitter feed, or I read it at least. And basically what it talked about was Luna having this sort of peg with the UST, right? Remember, that's the stable coin for Luna. Okay. So the stable coin for Luna is effectively going to compromise some of the market cap and price action of Luna if Luna's price keeps going down below a certain level. And I think that level, this individual marked out was like $55. So let's just say, the UST market cap, let me go over here and see what the UST market cap is, okay? And then we can see what Luna's market cap is. So UST market cap is currently $10 billion, 10.7 billion, okay? And then you have Luna, which is, where's Luna's market cap? Okay, Luna's market cap is at 29 billion. And the problem with this is the way Luna is burned is, for the most part, when there is more and more UST being created, right, or more and more people park their money in UST, Luna is actually burnt. Okay, so that decreases the supply of Luna. But when Luna's price is going down, again, this is the explanation that this person has. So when Luna's price goes down, it creates further pressure on this peg right here. Because remember, this peg, the dollar USD, right, UST rather, it's supposed to maintain this dollar peg. But if it doesn't, what happens? Well, you have to sell some of the Luna to be able to maintain some of this peg. And this creates sort of this cyclical, breakdown nature, where if Luna starts going down in price, okay, it might trigger sort of a cascade, not only in Luna prices, but it might start breaking down the peg itself, in which case the automated mechanism for the peg will also have to start selling Luna to maintain its own peg for the stable coin. So it creates this vicious cycle that I'm not quite sure if it's true or not. No one really has been able to verify or invalidate that claim, but I find it really interesting that that is sort of the narrative that's building for Luna, and that's something that I'm paying attention to. So if Luna starts to break down in price, remember, aside from price breaking down, there is a larger form of governance that is going to break down the price of Luna, which is the stable coin. Terra USD, this UST coin, right, is directly connected to Terra, which is the Luna coin. And if these two start, really fizzling out and having a cyclical breakdown nature, it could be very, very ugly. So that's one of the areas that I'm paying attention to for a short position. And then finally, a chart that's very similar to Maker is THETA. Same thing. THETA, aggressively large descending triangle. Okay, this descending triangle tells me that THETA itself is ready to break down. But similar to what I showed y'all earlier, I'm kind of hoping that THETA has just one more push up here. This gives us a better risk to reward trade. Okay, so we can short anywhere in this area right here around $5.75 to $6. You would keep your stop here above 8 or 8.75, and then you take your trade down back at this lower support range, which is 385, and then if you measure the height of this triangle and you say, whoops, oh wow, well that's not going to work. I don't like negative prices. Okay, so we're just going to say, from here, I expect THETA to probably break down, to some lower support levels. And I would probably figure THETA goes down somewhere around here, okay? Somewhere around this area, which is a 32% drop if it starts going down below this key support level of 385. So these are the assets that I'm paying attention to: Luna, THETA, and Maker for the short side. Long side, I already mentioned, okay? Now, finally, there's just one last thing that I want to talk about, which is this sort of phenomenon that Andre Cronje has mentioned, which is, the VE thing I'm sure you guys are seeing on Twitter. VE just stands for vote escrow. One of the reasons why this started to come up was because, if y'all remember, we made a bunch of videos on staking and farming, right? You guys know what happens when you generate yield, right? When you're getting a ton of APRs for you parking your money, what happens? Well, the DEX itself is paying you in the token for you to take that token, more than likely, to sell it on the market to offset some of the losses, right, that you may have if the token keeps going down, because the emissions are really high. This is one of the things that happened with Step Finance. What happened was Step Finance back in the day used to offer 1,000, 3,000, 5,000% of APRs, but they would pay you in STEP tokens. Now, what would people do? They would say, okay, well, I'm making a shit ton of money. What am I going to do with these STEP tokens? Well, I'm just going to sell them on the market and make sure that I recoup some of my losses as the token keeps going down, because other people are also selling them. So token value keeps going down. Your APRs generally, are going to start going down. And then the token value obviously collapses, 80, 90% from the highs. So Andre came up with this vote escrow sort of mechanism. Now, what this means is this whole idea of you getting paid massively in these emissions and these tokens is going to give you an opportunity to put them in, say, a DAO, a voting, proposal DAO. And that's what vote escrow, or VE, stands for, right? What you're really doing is you're going to take some of those tokens. Let's just say it was Step Finance, or I don't know, 1inch, or if you all remember, I did a video on One Harmony and we talked about Viper Exchange, right? On Viper Exchange, you were actually getting paid in the Viper tokens, right? So in the Viper tokens, what you could do is place them in this vote escrow, and it will basically lock up your tokens. So that means that the price of the underlying token, which is Viper or Step Finance or whatever you're getting paid in, does not have such a high emission. That means the price of it won't collapse like it did back here for Step Finance. Now, this is actually being implemented on the Solana ecosystem in ways where, if y'all pay attention to Sunny or this thing called Saber, where's Saber here? Let me search for it. Where's Saber? I thought Saber was here. Let me go to CoinGecko. Okay. Now, the reason I'm mentioning this is because both the Sunny protocol that I just showed y'all and Saber, okay, they've been going up continuously over the last several days, right? As you can see, this is how the chart looks for Saber. Why are they going up? Well, because this protocol and Sunny, they're trying to implement this vote escrow style within their tokenomics. That means that if you're getting a shit ton of APR, right, you have the ability to just park your money within this vote escrow, so it doesn't become part of the emission process. So you can't just sell your tokens. So you can keep the same APRs, but you could lock up the tokens for a longer time, right? You can see the voting escrow contract can last from a period of 1 week to 4 years. Okay. And when you lock up those tokens, you can make more money on that, right? They can give you another 10, 20, 50%, whatever the protocol wants to give you. So point is that this is one of the reasons why something like Saber, and then when I just showed you Sunny, are doing. They're trying to work through this process of how do we get this vote escrow thing so we can give our clients or people who are putting money on the platform, we can give them high APRs, but they're not crushing our overall price of the token. And so this is really the phenomenon that we find ourselves in, is that more and more protocols are trying to figure out how can we make sure that the emission process that we have does not completely crush our token value. Because once it starts crushing your token value, then more and more people are just trying to pull money away from the platform. They're not really interested in farming, right? Because you're farming and you're making a ton of money, but the token value is going down. So it's like you're basically at a net loss or really you're not gaining anything. So this is something that we got to pay attention to, and specifically pay attention to Sunny, which is one of the aggregators that's probably going to try to implement this. And then, like I said, Sabre is the other one. Okay, so pay attention to these two. And they're actually being implemented by the Tribeca DAO, which is one of the Solana-based governance platforms that's going to try to implement this, VE voting escrow type of governance. All right. So anyway, those are really the things that I wanted to talk about today. Are there any questions? I think we covered a lot, right? Talked about long opportunities, short opportunities, talked about BTC, still being in a very peculiar area, probably still being guided by what's happening in the stock market. Let's see, the stock market just opened, so let's just check it out real quick. Okay, it looks like it's opening up. Wait, no, it's not. Is it open? I'm confused. I thought it's open by now. Is it not? Do we have a time change or something? I don't think so. Yeah. 8:30 my time is stock market, 9:30. Oh, this is weird. Oh, it's a bank holiday? Oh, shit. Oh, it's MLK Day. Oh, my God. Totally forgot. Wow. Oh, my God. It's January 17th already? Jeez. Okay. Okay. Well, so bank holiday means more shenanigans within crypto, because if the stock market is not open right now, okay, well, we're going to chop around some more. All right. All right. Well, that's all I got for y'all. All right. Thanks for listening. Thanks for watching. Y'all take care. Good luck, and I'll keep you updated. Cheers.